just curious, how many of you have seen that lecture on YouTube from 2013? Anyone here? A few of you. Were any of you here in person at Stanford? You were? It was December, I think December 5th of 2013. That was a special day. Not because of the lecture, but because of what the PBOC did for Bitcoin in China. So I'll talk about that as well. Great. So good to be back. Good to be back at Stanford. It's changed so much. I was walking around. I've almost forgotten where the buildings are and all that. So how many of you are active students enrolled at Stanford? Okay, good. And alums? A lot of alums? Awesome. And the most important question is, how many of you are fans of Bitcoin to actually own some Bitcoin, no matter how small amounts? Oh, wow. Okay, a lot. Good, good. Okay, so I'm here to talk about what's next for Bitcoin and blockchain in China. I'll talk about Bitcoin as well. So we have, I think, 90 minutes, right? Or 80 minutes. Is that right?
80 minutes.
Okay, perfect. So, and we'll also save some time for Q&A afterwards, okay? Let's get started. That's one of the first original Bitcoin logos from 2000, I think 2008, 2009. The new ones have it slightly different. Okay, so what's next for Bitcoin and blockchain in China? Do you guys know? Any quick answers? Is there a future for Bitcoin and blockchain in China? You're here to find out? So I don't pretend to know the answers, but I'll give you my perspective on it. So China is actually crazy about crypto. As you know, for the last 5-6 years, China has been crazy about crypto, a lot of trading, a lot of activities, and I'll tell you about how that's been, okay? So obviously, with the recent crackdown, so let me take a step back. So it's been crazy about crypto for the last 5-7 years, but last year, specifically 2017, China suffered a big blow. The industry suffered a big blow because the PBOC sort of forced all the exchanges to close down. So in light of all the ICOs last summer, so they formally asked all the exchanges to close down, or it was more informally rather. So BTC China, we closed down our Chinese RMB exchange in September, October of last year, and many Bitcoin crypto companies, exchanges have since closed down, and they've moved offshore and so on. But the question is, what is the future? So assuming that you know about this brief history, what is the future? And the future is actually continues to be more Bitcoin crypto mining, and it's still happening a lot in China. It's still because China still has a very large share of the global market share for crypto mining, and the reason is that it comes down to economics. It comes down to people in China have the resources, have the hardware, have the electricity, and they can make money with it. So that's why it's very popular. So for the uninitiated, what is Bitcoin mining? Are you guys curious about what Bitcoin mining is? Anyone who doesn't know, should I just skip this slide? Looks like you guys don't know. So Bitcoin mining is like a free lottery. So you get these Bitcoin by doing computations for the blockchain, okay? Why is it popular in China? A combination of they have good assembly for electronics, they have good chip design, and also the electricity is cheap and sometimes even free. So we can talk about that later about the regulation. So more crypto trading. So even though crypto trading has officially been stopped in China, there's still a lot of underground exchanges, underground peer-to-peer trading. So crypto trading is still quite popular in China. They won't talk about it. There's a lot of, you know, just basically a lot of things are just person-to-person underground. So not institutionalized crypto trading, but certainly crypto trading for speculators and investors alike. So it comes down to two things, okay? So I'm gonna throw this question to the audience. Okay, you have investing, which is like savings, okay, and then you also have speculation, okay, which is like earning money, right? It's like earnings, making money. So what's the difference? Can you guys give me a good answer on how can you tell when something is done as an investment versus it's done as a speculation?
Research.
Research? Okay, what else? Research, that's a good answer.
Time horizon.
Time horizon, what else?
Risk profile.
Yeah, risk profile.
Risk profile, what else? Anything else? Those are all great answers. But turns out everything you've said, from research to time horizon to risk profile, in the end it's all subjective, right? Has anyone purchased real estate in the Bay Area recently? Right? if for those of you who have, or even in China, Shanghai, or anywhere, the buyer probably thinks it's a good investment, but someone who's standing aside will think, hey, that's really, really speculative now, given the bubble and so on and so forth. So it turns out it's all subjective. So my point is that even though we all have our own standards, what is an investment, what is speculation, the fact of the matter is someone else who's doing it, you might perceive it as speculation when they themselves wholeheartedly believe it's an investment, and vice versa. For example, I honestly tell people I've been investing in Bitcoin, and what do you think Warren Buffett would say? He'd say, like, Bobby's speculating. Now, I haven't had this conversation with him, but chances are he would say that I'm speculating. So it's all matters perspective, okay? So, and then we have the third term, which is gambling. So when you're speculating, people think you're gambling, right? So it's a sliding scale. It's all subjective. So what it is not, so I'm going to jump around different topics, okay? So in China, Bitcoin is not about evading capital controls. That's the most common misconception. People think that people know that China has strict foreign capital controls, and people assume that people use Bitcoin to evade all the capital controls. The reality is that in China, if you've been to China, anyone who's been or lived or studied or visited, or if on your trip to China, you may run into this. The official way to change money is go to the bank, line up. It literally takes at least 45 minutes to 1 hour to exchange money, US dollar to Chinese renminbi and back and forth. Anyways, it's hugely inefficient, I'll say that. And then they have these so-called underground money changers where you can just change money on the street really easily, US dollars, any currency to renminbi back and forth. So, and then that's for in person, and there's the sort of online platforms and so on. So there's a lot of ways to do it underground fashion. So people rarely actually use Bitcoin for capital controls for conversion, okay? People may use it as an investment, but it's rarely used for to evade capital controls. And I'll show you an example, okay? I'll give you an analogy. So this is a photo, I darkened it, of an airport. It happens to be Fort Lauderdale Airport. So the question is there capital flight, right? So how many of you, let's take a quick show of hands, how many of you actually believe that people in China, or had the idea that people in China would use Bitcoin to evade capital controls and for capital flight? Anyone? Yes? A few people? Have you done it yourself? Yeah.
The camera doesn't point to the audience.
I'll call you out by name. Okay, so the analogy, the example is this, okay? 10 million renminbi, which is about $1.5 million US dollars. So if someone, rich person, wanted to bring that out of China, they would use 10 million renminbi and to buy Bitcoin, okay? This was easy to do back before 2007, 2017, the closure of the exchanges. So now it's harder to do, but you could do it, right? And then you would then bring the Bitcoin to an exchange abroad in Europe and the United States and sell it for US dollar and euro, right? So have you evaded capital controls? Well, yeah, sort of. But the reality is that what's happening is there's also capital landing, because the Bitcoin actually arrived into the exchange before you bought it, right? So Bitcoin had to come from somewhere. As an exchange, we didn't just fakely create the Bitcoin for you to purchase, right? So the Bitcoin came from someone who wanted to sell it, and the seller actually now, after you bought it, the seller would now have the 10 million renminbi. Do you follow me? So in the end, it's actually trade neutral and no effect on the foreign capital reserve, the foreign reserves of the country. And this is a very important point. Even central bankers misunderstand this point. So for every trade that's traded on the Bitcoin exchange, for all the money that gets turned into Bitcoin, equivalently at the same time, magically, the Bitcoin for the seller becomes the money. So the money actually stays in the country. And this is a very important point. The money all stays in the country. So for the two people, yes, individually perspective, someone was able to change, the buyer was able to change their 10 million renminbi to Bitcoin. It doesn't matter the price, by the way, also. This is a very key point. It doesn't matter what price Bitcoin is, whether it's a 500 renminbi or 50,000 renminbi, where it is today. You could still get some number of Bitcoins with this 10 million renminbi. But the seller would have then sold their position. It could be one seller, it could be 1,000 sellers, and they would now have either the whole 10 million or a fraction of the 10 million. You follow me? So the money stays in the banking system. The US dollar that's in the China foreign reserves did not move anywhere, right? It doesn't matter if it's US dollars or euros or gold. Nothing moved. It's just that Bitcoin came in and out, and then the money changed hands. So that's why I use this photo of the airport, because it's kind of like people getting paranoid, saying, "Oh my gosh, all the planes are taking off out of San Francisco airport every day. Oh my gosh, we have a huge, exodus of airplanes." But the reality is, for every 10 airplanes that take off from San Francisco airport, guess what? 10 airplanes landed in the morning. Well, maybe sometimes 9, sometimes 11, but you get the point. So the airport itself, over a long series of time, is net neutral in terms of number of airplanes. You guys follow me? Yeah, okay. So for those of you who care about this topic, that's my explanation. So Bitcoin is really money in the cloud. Okay, this is for the Chinese people alike, for globally alike. Okay, money in the cloud. It's a digital asset. Essentially, in my opinion, Bitcoin is the ultimate hard currency. Okay, for someone like me living abroad, and unlike those of you who live in the United States, you don't care much about hard currencies. But globally, people all around the world care very much about hard currencies, because their local currencies generally have not stood the test of time. Okay, whether it's an African country, a European country, Asian country. So hard currency is very important in the rest of the world. And Bitcoin, in my opinion, is the ultimate hard currency, even though there's nothing solid about it. Okay, so to summarize it a little bit, Bitcoin is about investing in the future. It's about investing in the future with the internet, with blockchain, future technologies. It's a notion that before 2008, before 2009, all of commerce, all of transactions, payments were done using this thing called fiat money and gold, right? These are all physical, assets, right? Physical assets and accounting assets. But nothing was digital. As I've grown up, I've seen the revolution of digital photography, entertainment, movies, music, all going digital. Now you have a lot of services going digital. But money and finance is probably the last frontier. So this is really about money, assets going digital for the first time. Okay? So it's a new revolutionary global asset class. I emphasize it's truly, truly global, because Bitcoin has no boundaries, no language barriers, no cultural barriers, no gender preferences, nothing. It's anything, anyone. Your pets can own Bitcoin. Your washing machine can own Bitcoin. You can own Bitcoin. Okay? So it's a new digital asset for a digital age. Okay, that's what Bitcoin is about. So now let's talk about prices. Anyone care about prices? This is supposed to be academic audience. So only 3 of you. So that's about right. In other conferences I go to, like everyone's hands, yeah, we all care about prices. That's all we care about. Bitcoin prices. Do you guys know what Bitcoin price is today? Anyone know right now? 9,000. How much? 906. 9,000, yeah. I have it on my watch. I do. On my Apple Watch, the bottom line is the live Bitcoin price. Yeah, I've had it for the last few years. Okay, so we're going to talk about a brief history of Bitcoin in China, historically BTC China, all that, through looking at Bitcoin prices. Okay, so it's a trip down memory lane, if you will. Unfortunately, our memory lane only goes back 7 years. It starts in June of 2011. That's because that's when we first established the very first Bitcoin exchange in China, called BTC China. So I joined this team, my co-founders, in 2013, but they started in June of 2011. And this was the first Bitcoin exchange in China. And the reason it got started, a reporter was asking me, why did you guys start this exchange? And I said it was simple, because Chinese people wanted to buy and sell Bitcoin. And at the time, the only other exchange in the world was the famous Mt. Gox exchange, Mt. Gox, and that was in Japan, Tokyo. And unfortunately for Chinese people, it was actually quite hard to get money into Mt. Gox or get money out. So my co-founders decided to start BTC China to provide a local platform. And back then, it was just a website. It was just all personal accounts moving money. So it was very, it was the fun days, the easy fun days where anyways, so yeah, my co-founders would just use their personal accounts to move money in, to accept deposits and withdrawals and all that. So those are very early days. And because of very early days, Bitcoin was really cheap. Guess how much it was? It started at, the first trade, I believe, was at 100 RMB. And by the way, the scales are in RMB, okay? The conversion ratio is about 6.2 or 6.3 RMB per US dollar. So this would be about $15, $18 US. Okay? The red and blue is just the high and the low, okay? So I didn't have good data, but anyways, just the high and low for the day. So as you can tell, what happened was for the first year, it started trading at 100 RMB and it's gone down to as low as about 14 or 11. I forgot it was 11, about 11 or 14 RMB, basically $2, $2 US. And then it went back up by end of 2012 to about the same price, 80 to 100 RMB. So if you were in China, you had a chance to buy Bitcoin at the amazing price of $2 per Bitcoin. Right? This is about October, November of 2011. Those are the good days. Anyone buy Bitcoin? Yes? Yeah? What time? Not on this chart. Okay, so I didn't either. I'll tell you my sad story. Is I got involved with Bitcoin right before this, and I have to blame it on my computer science degrees because I was too smart, you know, and I was too worried about security, and I was like, until I find a good way to store it, I'm not going to buy Bitcoin, and I missed it for like the first 2 years. So that's precisely what happened. And I tell this story because some of you are probably doing the same thing. You're like, I don't know how to store it, so I'm going to wait. And by 2020, when you get around to it, the price will be higher. Okay, so the next slide is the first rally, okay? And I witnessed this firsthand. It was in 2013. So if you look at this, these are all linear scales. And what happens is if you compress it, you know, through time, that whole sort of U curve becomes a pretty flat line. Okay, so the green line here is actually the high range of the previous chart. Okay, so it comes down here. Okay, so in February of 2013, that's when I approached the co-founders to join them as CEO and to invest in the company, and that's when the rally started, right around there. I don't think it's causation; it's just correlation. And then I remember talking to my brother about price. Yeah, this is a distinct memory. I remember talking to my brother Charlie Lee, who's also famous. I was like, hey, what do you think? Will price break out? And he said, yeah, it's going to break out past $20 US, and then it's going to go up. And certainly, right around April, it broke up, and it went all the way to about $268 US on MT Gox. So in China renminbi, it went to like 1,800 RMB. Okay, that was April 13th or April 15th. I forgot the exact date. And then, of course, it came back crashing down by more than half, okay? So let me ask you, would this be a good time to buy it, point A or point B at the peak, or point C after the correction? A, B, or C? All of them. Yeah, all of them. That's actually true. Because if you're buying Bitcoin for just a few weeks, then you better buy it at A. But if you're buying for multiple years, like investment, right? Then it really didn't matter, and time will show this. So that's a U, and went up, went down. So that's a 20x increase just in just a short few weeks. Okay, this is the next slide. Okay, so we squash it down again. The blue line is the previous line, and now we're adding the rest of 2013. Okay, after that summer, it was flat, trading around $100. Yeah, around $100, $150. And then it went up in November. And then another correlation thing is that's the day when BTC China announced our venture funding. We got funded Series A funding by Lightspeed China. And the day we announced the press release, Bitcoin price just went up. Right? So I don't know if it's causation or correlation, but it was Monday, November 17th when it went up. And it kept going up until the PBOC decided to crack it down on December 5th, which is when I was here at Stanford. You guys remember that was the day I got off the plane. You know, who was it? Was it Bloomberg or what's the other publication? Reuters. Yeah, one of them was calling me like I was on the plane about to take off. They're like, "Have you heard I'm like, what's gonna happen?" Like they're saying, "Oh, it's gonna crack down." I'm like, "Oh, don't worry." Got on the plane, came back, landed, and the price just crashed. So those fun days. So basically, it went all the way up to $1,300. Okay, from about $150. So that was another U shape that went up, and this time it was 4x increase from the previous peak. Okay, so you start to see a pattern here. The U and then the straight up. Okay, so this is now we even go longer. We go through 2016. So this part is all new. This is the second bubble, and then for the next 3 years, there's actually a 3-year Bitcoin winter from 2014 all the way through 2016. Of course, Mt. Gox's website, not website, their whole exchange went bust in February of 2014. That was a huge shaker in the industry. Any of you have money in Mt. Gox? Any of you? Yeah? You might get some back, I hear. Is that right? Have you gotten back yet? Partially. Cool. Okay. So it was a whole sort of Bitcoin winter bear market, and it lasted 3 years. These were the hardest years for me running the company. It was just gloom and doom. There was no cash flow. We're just burning money. People are losing confidence. People leaving, and all that stuff. So those are the hard winter days. Okay. Okay. So the question is, what's going to happen after 2016? Well, if you follow the charts, then what happens? Okay, so now everything gets squashed down to this green line, and this is what happens after 2016. It breaks out in 2017. Okay, it breaks out from the high was $1,300, and it went all the way to how much? Yeah, $5,000-$6,000 if I recall correctly. Yeah, it's actually went up even more. Okay, so all these U shapes and keep going up. Okay, 5x increase. Okay, so I didn't update this chart to now, but essentially, this is where the price would be right now, at about 9,000 US dollars, 60,000 renminbi. Okay, and now you shrink it down. I purposely shrinked it down. This is the future. Okay, we're in 2018. This is the future. So what's going to happen? So what I predict is that it went up to this high, by the way. It really did went up to this high. This was in December 12th of 2017. And, we come crashing down, correction, and it might even go higher. So I can only say this might happen. And the question is, will there be a multi-year bear market, or will it happen really fast? That I don't know. Professor Richard might know.
If I knew, I wouldn't be sitting here.
Okay. Okay, so in China, Bitcoin was never about payments and spending. Okay, in some countries it is. In the US, people supposedly, I hear, they use it to buy illicit drugs and services, right? But in China, I mean, that stuff is really stamped out, so clamped down, so there's none of that. And then in China, they don't even allow it officially. Even the merchants, Alibaba, Taobao, Tmall, Jingdong, they officially forbid all transactions relating to Bitcoin. And that's by the orders of the regulators, government. Okay, so all the payment companies, they don't touch it. All the banks, they don't touch it. Okay, what it is about making money. In China, Bitcoin is very much about making money. It's very much about the entrepreneurial spirit, how to make extra income, investment and trading. Again, you could use it interchangeably in terms of investment and speculation. All right, so this is the million-dollar question that many people have posed. I don't know if you're curious about this. What do Chinese regulators think about Bitcoin? Right? Very interested? Yes? So before I answer this, I'm gonna change the question. It actually is not what Chinese regulators think about it. It's actually what global regulators think about Bitcoin. And there's two reasons. Number one reason is that it turns out the issue is a global issue. It's not a uniquely Chinese problem. Do you follow me? And the second reason is the solution is the same. The challenges and the solutions are the same. So that's very much why the Chinese regulators themselves often consult international regulators to see what they might do. So China might either copy or they might do it first. So there's a lot of global conversation going on. In fact, as you may know, I believe it's a G20. They're having meetings these few months about crypto. So I'm not personally involved, but I get a lot of briefings on that. They've been, all the G20 countries are getting together. They gotten together, I think, in Argentina recently. I forgot which South American country. And, so they're going to publish something, I think, in July timeframe, a global approach to regulation. So it's really much a global problem, okay? So now I'm going to tell you what the problems are. So the global challenges of Bitcoin regulation, it's a decentralized currency, not a real currency. It violates foreign control. It's money laundering, lack of identity base, use for fraud, pyramid schemes. Also, there's a lot of high hacking and security risk. ICO regulation is also a topic. Corruption, graft, taxation issues, speculative trading, market crashes, and finally, it's competition with government crypto. So this is the litany. This is the whole laundry list of everything that's problematic with Bitcoin. All right? I challenge you to find something that's not on this list. All right? I mean, really, all the regulators, I don't care if it's tax authorities or stock regulator agency or banks or central banks or whatever, these are things that are on top of their mind. They care about this. And to be honest, there is no solution. Okay? So my answer to you is this. The reason Bitcoin poses these challenges is actually in the DNA of Bitcoin. So for those of you who've sort of read more about Bitcoin, understand it, Bitcoin was designed and invented and created in a certain way to have certain attributes. Do you follow me? Has certain attributes. And these attributes were not a random collection from nature. They're actually purposefully injected into Bitcoin by the creator, right? Satoshi Nakamoto, okay, in the white paper. So as you may know, researchers have been studying digital currencies for the last N years, decades, and they never came up with the real solution until the breakthrough in 2008, the white paper, Satoshi Nakamoto. So with this approach, which was released in January 2009, this thing called Bitcoin was born. And it was born with these attributes, which flies in the face with traditional law and enforcement and regulation. And that's why you have all these issues. Okay? So to sort of skip to the end, my point is, I'm sorry, that's how it is. Meaning, for example, like lack of real identity. Bitcoin and Bitcoin accounts are pseudo-anonymous. The reason is it's just an account number, right? It's just like a Swiss number account number, Swiss bank number account number. Do you have those? Anyone? Swiss bank? Yeah. I'll call the IRS. So same thing, right? It could be corruption graft. Hey, I'm sorry. With Bitcoin, there will always be corruption graft because you can always send money to the recipient anonymously, and they can receive it anonymously, and it's here to stay, right? It's just, you could do it with gold, but it's just more convenient with Bitcoin. In fact, I in China, talking to people, talking to law, not just China, in other countries as well, talking to law enforcement and agencies, they're seeing more and more instances of politicians and so on accepting Bitcoin, as corruption, right? Graft. Speculative trading, you can't stop it because it's volatile. The price will go up and down. People trade that. That's human nature to want to have short-term profits. And then market crashes because of the bubble and the overbuying and all that. So a lot of this is human nature. A lot of this is just inherent in Bitcoin. Not a real currency. Well, that's a label they put on. Governments, they love to do that. They say Bitcoin's not a real currency. Don't subscribe to it. Money laundering. Money laundering. This is key. I can give a whole speech on money laundering. I'll talk about this later when you guys have a question. Yeah, used for fraud, pyramid schemes, all that stuff. Okay, so there's a global pattern to suppress Bitcoin. Over the last few years. Oh, by the way, I sold my company. I don't know, I forgot if we mentioned this. I sold BTCC, we sold it, got acquired in January. And now I'm much more relaxed. And I'm much more free talking. I can tell you all the good and bad stuff. So what I've noticed over the last few years is that there's been a global pattern from governments and agencies around the world to suppress Bitcoin. And either it's intentional or it's coordinated. It's hard to tell. I don't subscribe to a lot of conspiracy theories. It's hard to tell whether all the CIA and all the central banks are conspiring to suppress it, or maybe they just do it out of their own sort of self. So you see the three monkeys? You know the idea behind this? The one that can't speak, the one that can't see, and the one that can't hear. It's more about the one that doesn't want to speak, the one that doesn't want to see, and the one that doesn't want to hear. So it's my analogy of what the regulators, they just want to pretend Bitcoin's not around, right? But the reality is it's too late. Bitcoin was invented, it was created, it's been on the market for so many years, it's gained so much market value that it's unstoppable, okay? So what they're doing is they're regulating exchanges. That's a good thing, I support that. And they're also banning banks from touching cryptocurrencies. So I guess that's reasonable, but long term I think banks should touch it. But in the short term, you see in the news, more and more countries are telling banks explicitly, do not touch Bitcoin, do not process Bitcoin transactions, do not hold Bitcoin for your customers, do not advise, do not store, do not hold custody of Bitcoins for your customers, and so on and so forth. Okay, so this is very explicit. The banning ICOs and tokens issuance, or they're creating huge regulatory sort of complications. So this happened in China. This is why this led to the whole shutdown of BTC China. Last summer, huge ICO boom in China, and finally the regulator says no more, enough of this. They declared it illegal to fundraise via ICOs. Okay, and it's happened in China. It may happen to more countries as well. Okay, showing proof of funds. This is where it gets to my nerves. A lot of banking transactions now ask people to show the proof of funds, right? Well, how did you get this money in the bank account? Or who you're sending it to, you know, all that stuff. It's all this nosy questions they ask you. This is the problem with a asset system that someone else controls. When your money is actually deposited at a bank, it's actually not your money, right? Right? Well, I can go into that later. So a lot of stricter KYC processes. So all the exchanges are improving their KYC. You know, I told you about 7 years ago when my co-founders were just taking money in their personal accounts to facilitate buying and selling. Those good days are gone. Okay, I really mean those are good days because that was really facilitating really easy. Okay, limiting transfers, limiting amounts of transfer per day, and so on and so forth. So also a lot of FUD about Bitcoin itself. So there's a global effort to sort of suppress Bitcoin and sort of take people's attention away from Bitcoin, right? It's rare that I get to speak at institutions about Bitcoin, but what you hear more is people like Warren Buffett and people openly criticizing Bitcoin's value and value of Bitcoin. Okay, so now the question is, why do Bitcoin prices keep going up? Have they been going up? Yes, no? Well, in the last 3 months, it's been going down. Last 4 or 5 months, it's been going down. But haven't been going up. So again, it's relative. If you look at 4 months, it's been going down. But if you look at 4 years or 10 years, it's been going up. Why is that? This is a real fundamental. Do you guys know why? Anyone know why Bitcoin prices keep going up? Anyone curious?
Networks, more demand for it.
A lot of reasons.
Fundamental.
How about this? Let me ask. Let's do a poll, okay? And I want you to think about this question carefully, okay? How many of you, and be honest, okay? How many of you fundamentally think and agree that Bitcoin prices will keep going up? Versus the other answer would be you think it's just a fluke that Bitcoin price has gone up the last 8-10 years, and that's going to correct and go back down to $10, $100. So A or B? A is you think it'll keep going up. All right, B is it's a fluke. It's just that, you know, I happen to be speaking today. It might go back down to $200 in the next 3 months. Anyone B?
Not in the next 2 months, but in the future.
In 20 years, it'll go back down to $2? Yeah?
It is difficult to
Yeah.
when.
Yeah. Do you share a room with Warren Buffett? Yes. Okay. So I'm with the A camp, okay? And here's my answer. Bitcoin's value does not come from the endorsement, acceptance, or regulation, nor regulation by governments. Okay? A lot of people mistakenly think that something valuable has to come from the endorsement, acceptance, or being regulated by the government. Do you follow me? People have that idea. I don't subscribe to it. I think Bitcoin's value does not come from that. Rather, Bitcoin's value comes from the inherent failures, limitations, and inconveniences of our money system, which is a fiat money system. Okay, so I've been in business, I've been running this company, and I'm a world traveler. I have bank accounts in other countries, and I move money. And what I've seen personally with my own eyes, and And I can only say this is the experience I've gathered in the last 4 or 5 years running a company. Before that, I was not a businessman. I was just a salary employee, so I didn't have this perspective. But for those of you who deal with bank accounts moving money, you may hear similar stories. I've seen the horror of the fiat money system, the banking system. Everything from opening bank accounts to declaring funds to requesting wire transfers to checking for stuff like that. It's horrible. That's another 3-hour lecture of all the things I've seen. Anyone experience that? Yeah. Okay. So wow, a lot of people who do business experience it. And the rest of you who didn't raise your hand, I don't blame you, because for you, banking is just go to the ATM, stick in your card, you get $200, or paying credit card at dinner. It's very easy. But the real banking underneath is just, that French word, right? And that's why I think Bitcoin value will go up. Because that system, in my opinion, is going to get worse and worse. Okay? For those of you who are experienced in global finances, you've seen it get worse and worse. You've seen it, how difficult it is to open bank accounts, to move money. They're so nosy. It's like they're asking you, like, wait, it's my money. I want to withdraw it. Right? Anyways, so it's crazy. I have some, I don't want to share it over the talk, but I have some stories. I was just in Las Vegas trying to get some cash out of the bank. I'll share it. So I'm going to go play in the World Series of Poker this year. It's a $10,000 buy-in in the Rio Casino. So I'm going to, I went. Huh?
French word in Las Vegas.
Yes. So I went to the bank to withdraw money to go do the buy-in. I withdraw $20,000. Okay. So I made some money selling the company. So I withdraw $20,000. Now most of you don't do it. Okay. So I admit. So I withdraw. I asked for $20,000. I just didn't flinch. I was like, oh yeah, I'm gonna go gamble. Right. That's a real reason. And they asked me, what are you gonna use it for? I'm gonna go gamble. They asked me, what games do I play? I'm like. Anyways, so they said, are you sure you want to take cash? We can give you a cashier's check. I'm like, no, I'll take cash. So they don't like it. And then when I go to the casino to deposit the $10,000 to buy that tournament seat, they ask me for my social security number because it's a cash transaction that hits the $10,000 mark. So all this crazy stuff. I mean, this is just in the US. I mean, it's just crazy. You can't move money. Cash is actually the controlled substance now. You can't bring cash in. Like the $20,000 I got, I can't bring it into the US without declaring. And I can't bring it out without declaring. The limit is 10,000. And if you do 9,000, 9,000, 9,000 each time, you're structuring your movement of money, and that's also illegal under anti-money. No, seriously. A lot of this is illegal. Now you can't even deposit cash into someone else's bank account. Seriously, if I owe you $500, tell me your bank account number, Bank of America. I go $500. I deposited Richard Dasher's bank account. They won't allow it. It's a recent rule. So a lot of issues. Okay, so let's keep going. Okay, so governments worldwide will do actually more and more to suppress Bitcoin because they don't like the fact that Bitcoin is really open and free. It's really free money in the sense of free speech. Okay. However, the good news is that Bitcoin was designed to survive this kind of censorship and this kind of adverse environment. So I'm confident Bitcoin, with its decentralized nature, will survive the decades to come. Okay. All right. So how to invest in Bitcoin? Anyone want to invest in Bitcoin? Yes. Anyone? Checking the time. Yeah. You do? No Bitcoin? Do you hold any, or do you want to invest more? You hold some, you want to invest more. Anyone else? Okay, maybe I should, yeah? A few more? Willing? Yes. So I'm not, just disclosure, I'm not an investment advisor. I'm not, advising you to invest in Bitcoin. Yeah, so you sign the waiver coming into the class, right? Yeah. Okay, so here are the mistakes to avoid. Here are my top 4 mistakes to avoid. It may sound redundant, but many people still make these mistakes, and I certainly made all 4 mistakes. So here's what it is. The top 4 mistakes when investing in Bitcoin. Things to avoid. Okay, you ready? Number 1, indecisiveness to make the investment. Right? Many of you. Right? For me, 2011, when I first started mining Bitcoin, I should have just bought Bitcoin. Instead of mining it, I should have just put a week's salary into it. and then I'd be a multi-millionaire. But I did not. Okay. So anyone indecisive? Yeah, see a lot of people. Some of you don't even know you're indecisive. Okay, second one is, this is key, okay? For those of you who actually do make the move, many of you will make the mistake of not buying enough at first. So oh yeah, I'll invest $13. Really, my good friend in Shanghai, American, I was like, you gotta buy, this is my friend, okay? I won't say his name, he knows who he is. I was like, you gotta buy some Bitcoin. You gotta buy some Bitcoin. And he's really conservative with his investments. So he said, okay, I'll buy one. And I sold him one. We had dinner and it's okay, buy one. And it was like, literally, it's like $15. He bought one. And now that one Bitcoin, $15 is worth, $10,000. So he's hitting himself for not buying enough. And his wife is now hitting him for not buying enough. Okay, so third thing is selling after a small gain. What I mean by small gain is not like 5%, 10%, 30%. I mean, 30% is a big gain, right? But to me, 30% is not even a small gain. A small gain is like 200% return, 300% return. So there are people out there who've purchased Bitcoin at $100. I was like, you got to buy Bitcoin, it's only $100. They bought it, they're like very happy. And when it gets to $300, they sell it all. They triple their money in 3 months or whatever, 6 months. Very happy, right? Yeah? But in the grand scheme of things, that was the most terrible mistake you made, because if you sold at 300, now it's at 9,000, So so my point is, don't sell after small gain. If you don't make 100x or at least 20x, don't sell it. Yeah, that's my non-investment advice. And lastly, is to sell it during panic crash. So you will always have panic crashes with Bitcoin in the future, because it's human nature for it to go up, to be overbought, and to be oversold, right? After it's overbought, it'll come crashing down, and the reaction is sell it. It's gloom and doom. It's over. Bitcoin is dead. That happened twice or 3 times in China. It's happened everywhere else. So the idea is to just hold steady. This is a 20-year investment. Don't think about selling it during panic crash. Okay. All right. So thank you. Follow me on Twitter. By the way, I have another slide deck to go through, and we have some time, right? Yeah. Okay. So the reason I tell you follow me on Twitter, this is an inside joke, is my number of Twitter followers is what I outwardly tell people that's my price prediction for Bitcoin. Yeah. So today it's at about 75,000, 74,000 followers. So the more people that follow, you're helping raise my price target. Yeah, so it is a self-fulfilling prophecy, I admit, okay? But it's fun to see, I started this back when my number of followers were only 2,500. And at the time it was ludicrous. What do you mean Bitcoin's gonna hit 2,500? And I said it. And then it hit 2,500, hit 7,000, hit 10,000. It's almost hit 20,000. So my follower is always ahead of the Bitcoin price. So I'm not worried about that. Okay, all right. So thank you very much. So this is the first half of the talk. If you guys are interested, I can go and talk about more about Bitcoin as an asset class, why it's revolutionary. Would you guys like that? Yeah. Okay. The second part is pay-per-view. Okay, I'm just kidding. Actually, I'm gonna pay you. Okay, we're gonna do the second part. Anyone want to get paid today? You ready? Have your phone ready. Okay. All right. So Bitcoin digital currencies, it's a new model of ownership, okay? This is a modified version of a talk I gave at TEDx Shanghai a year ago. So think about this. So let me repeat. So Bitcoin and digital currencies are actually a new model of ownership, okay? So what things do you own today? What is the ownership model today? We're gonna go over that, and why is Bitcoin a new model, okay? All right, what is ownership today? It's ownership by title. What that means is the things you own, especially the more valuable things, it's actually owned in your name. And that's the term owned by title. So the real estate, cars, for those of you who own airplanes and yachts, same thing. Also bank accounts, mutual fund accounts, they're owned by title. You follow me? Is that a good thing? Yeah, of course. The more I own, you know. For rich people like Warren Buffett, Bill Gates, it's all owned by title. Stocks and all that stuff owned by title. Nothing wrong with that. Or at least not until you listen to me speak. Nothing wrong with that. By definition, it's tied to identity. Right? Owned by title, it's tied to your name. That's why even if I do a legal name change, wait, that's not the right analogy. Okay, but the point is it's tied to identity, birthday, and all that. So my point is the real Warren Buffett can get access to his bank accounts and the money inside, but I can't because I don't look like Warren Buffett. I don't have the same name and so on. Okay, so the past, it turns out, it did not always used to be that way. In the old days, ownership was by physical possession. Right? This is before the so-called current forms of government, the more mature government. In the old days, in the really old days, it was physical possession, whether it's gold bars or a basket or a vase or a jug of wine, a satchel of rice and stuff like that, or your farm goods, So all owned by physical possession. But what's the problem with ownership by physical possession? It turns out you can only hold so much, right? Whether it's the clothes or the eyeglasses or the jewelry, you can only hold so much, and you put them at home. And you can only have safekeeping of a certain size. And that's why real estate, that's why in the old days it was castles and guards and knights and armor and stuff like that, right? People guarding physical real estate, right? So those are the medieval days. So it didn't scale. Okay, that's why now you have government and title, and you have law enforcement to help enforce it. Okay, today's financial system is also owned by identity, right? We talked about that already. Credit cards, bank accounts, even PayPal, WeChat Pay, Alipay, and all that stuff. Even digital goods, even digital accounts are by identity. Think about like airline miles, right? If you have Southwest or United Airlines, you have accumulating miles, credit card reward points. All those digital assets, so-called crypto, or not crypto, those are all virtual gift tokens and stuff like that. They're all tied to identity. You follow me? Okay. What's wrong with identity-based ownership? Anything wrong with that? Here's my spiel, okay? It turns out by definition, and this may take a little bit of thinking on your part, okay, to realize this. Anything that you own by title, by name, is actually not yours. It's actually under a third-party control. Meaning that if they wanted to, them being the third party, can muck with it, can tweak it, can confiscate it, can assess charges, okay, can assess liens and prevent you from selling it or transferring it. They can assess fees and so on and so forth. Okay? They can just confiscate it by the court of law. So the cars you own could be confiscated. The bank accounts, it could be frozen. Your real estate can have a lien on it. You can't sell it. Right? So that's the insight that even I did not realize until just recent few years. When I got into the Bitcoin industry, I did not realize the notion that identity-based title ownership actually is not at my mercy, is at someone else's mercy. Okay, the slide photo here is a line showing people lining up to get money from the Bank of Cyprus, and this was in April of 2013. What happened? That was when Cyprus had a budget crisis, and the powers that be, the government legislators said, hey, we can't balance our books. How are we going to find the extra money? We can't. We've already taxed the hell out of all the people. How do we get more income? You know what they thought? Why don't we just dip into the bank accounts of our citizens? That's what they did. They announced they're going to take a haircut. A haircut. Sounds like a haircut, but it's a real big haircut. It's like 10-20% haircut. For all account holders in Cyprus, bank accounts, over 100,000 euros. They're like, if they have 100,000 euros, they're rich. They won't mind. Right? So if you have over 100,000 euros at the time, you actually got a haircut. That was a proposal. And that's when all hell broke loose. People lined up and get their money out of the banks. Because they can actually do that. Okay? So the final solution, they after a lot of back and forth, they actually do this. What they did was they actually stuffed, these banks are going bankrupt, right? So, so they stuffed the distressed bank equity to the account holders. They forced them to take it in exchange for the Cyprus euros. So this made Cyprus euros less valuable than German euros. So it was really awkward situation back then. Okay, so your money is actually your money is actually not your money. So we talked about the bank case, but even the physical case, even the paper bills, your money is actually not your money. And the reason is the value is actually endorsed by the government. So they could withdraw at any time, okay? So the oldest days, it was, the German mark during the World War days. Those old marks, Deutschmarks, were just, they just rendered useless, right, after the war. And of course, more recently, would be the Zimbabwe dollar in the late 1990s and early 2000s. The Zimbabwe dollar went through hyperinflation. Eventually, you saw a paper note, 100 billion, and that can only buy you like 3 eggs. The largest is like 100 trillion note. I mean, they sell on eBay now for a few dollars. But literally, it just inflated out. So you have cart bells with money, okay? And more recently, and this is not, these are, Zimbabwe, I guess we anyone from Zimbabwe? But even more recently, real, countries like Venezuela, the Bolivar, the 100 Bolivar got canceled. I think this was in 2016. And late 2016, the Indian rupee notes, the 500 and 1,000 notes got canceled, right? Some of you, anyone from India, you remember that? And to me, that's fraud. To me, that's like, what? There was a mad rush to exchange these money because the government can arbitrarily cancel it. So are these, these are, you could say, oh, these are just, backward countries or whatever. But that's not true. Even G20 countries, even first world countries are canceling banknotes. You may not know this, but the British pound actually got canceled. The £5 note, the paper version, got canceled last year in exchange for the newer polymer-based. And the £10 is going to face the same thing. In China, the renminbi got canceled. The old issue renminbi got canceled. US is one of the rare countries where they don't officially cancel the old notes. But if you actually hold on to them, you're literally, the money in it is just evaporated, right? So it's happened in Britain, Germany, India, Venezuela, Zimbabwe. These are just examples. It's happening all over the world. They can just cancel notes arbitrarily. Many of you have seen, you know what I'm talking about. So your money is not your money. So what's next? So the evolution is, the next phase is not ownership by physical possession. It's not full ownership by identity, but it's a new thing. Ownership by information. What I mean here is this, okay? It's information assets. All right, you guys ready? And of course, I'm talking about Bitcoin, right? Bitcoin digital currencies. True digital asset is where the asset itself is digital. And that's what it is. Bitcoin, the asset is digital. It's not just seeing it on a web page, on a screen, on a computer or a tablet. That's not what's digital about it. The nature of it is digital, okay? The private keys I'm talking about, okay? So it's ownership by information. This yields to digital assets. All right, Bitcoin, 2009, invented. It's the brand, okay, I guess, yeah, I'll go to the next slide. It's a brand new digital asset. It has a few features. Let me go through them. It's limited to 21 million. You guys all know this, right? 21 million maximum, okay? It's based on information and mathematics. We trust that? Yes. 1 + 1 = 2. I trust that. Okay? Borderless global, we talked about that. Bitcoin is truly borderless global. It's not identity-based, meaning a Bitcoin account holder is not the account holder because their name is Bobby Lee or whoever. Rather, it's because of the passcode, the passphrase, the secret key, the private key of that account address. Okay? And because it's not identity-based, there is no third party. There is no one person to say this. By the way, let me come back to that. I want to make another point of identity-based. The issue with identity-based ownership is that someone makes a judgment whether you are who you are. These days, some banks require 2 forms of ID when you walk up to the teller. Have you heard of that? Yes? Every once in a while, I walk to a bank without 2 forms of ID. They're like, sorry, you can't withdraw money. or you can't do a transaction because you have to show me 2 forms of ID. But I'm the guy, like this is my money. I know it, this is my account. But the teller says, nope, not good enough. Right? So that's a prime example of where I am the real person. This is not fraud, I am who I am, yet they won't let me do it. Because they're the ultimate judge. They keep my money safe for me, the guy who's complaining. Right? There's stories like where, it happened. I withdrew some, let's see, when was this? Yeah, so the daily limits for ATM, maybe $500. And I asked to increase it. I go to Las Vegas, me the gambler. Yeah, the secret is out. So I asked to increase it. And they say, 1,500 maximum. Now, for a lot of people, 1,500 is a lot of money. I agree. It's a lot of money, right? You certainly can't spend it all. You don't want to gamble it all away. But if it's my money and I want to withdraw more than the 1,500, they won't let me do it. And their theory is to protect me so that there's no fraudulent stuff. But what if I say, hey, I accept that risk? Because I've never lost a bank card. I've never revealed my PIN code. We've never had identity theft or any sort of fraud with my debit card. Yet they say, for your own good, we're not going to increase it for more than that. So that's an example, prime example of why your money is not your money. So no third parties, okay? So that's the beauty about Bitcoin. Okay, here we go. You guys ready? So in the end, Bitcoin is about ones and zeros. It's all about digital stuff, meaning that for the first time, now you can move money with just information. So in the old days of physical possession, I have to move stuff. I have to give you the chunk of gold, right? Give you the assets. If I have 3 chickens, I tie them up and I give it to you. But you have to come meet me here. In the days of title transfer, right, if you buy a home, sell a home, buy a car, sell a car, you don't have to, you have to deliver the car, but the home you don't deliver, right? The home stays wherever it is. What do? Well, you go to the third party, title registrar, and say, okay, now we're signing over. The real estate has been sold. You show them the purchase document. They sign off. You pay taxes and all that. But always involves a third party. So the new model of evolution, the new evolution of ownership is that now you send money by giving information. So I've just given you a lot of money here. Because maybe that's a private key. Okay, not exactly that. But the point is, with Bitcoin, with just digital assets, with information, I can send you money just by blinking. Because I blink to you in Morse code, that might be my private key. Or I could just give you information on a business card or just by saying you a secret phrase, a secret word, and that's giving money to each other. So that's a true freedom of moving money. When you can just move money by 2 people conversing, freedom of speech, whether it's in person or online or through iMessage or through whatever communications protocol. Okay, so I'll give an example. This is a Bitcoin account, okay? So the account number is that, I don't intend you to see it. It's that string. It's 1N21WE, uppercase, lowercase. And this is the QR code representation, okay? That's the account number. Have you guys, I assume many of you have not seen a real Bitcoin account, right? Is that right? So this is an example of a real Bitcoin account. And what's amazing is this account is not tied to me or my name or so on. It's actually just tied to this private key, okay? So the private key is over here. It's this thing here. It's much longer. It's alphanumeric, has numbers and letters, uppercase, lowercase, and that's a QR code. It's a bigger QR code because there's more information here. So this is it. Whoever knows this has access to this account. Isn't that beautiful? All right, clearly not a lot of computer science people here. It's beautiful. This is pure nature beauty. Okay, so that's the password. This is the account number, this is a password. And they're tied together. And in fact, how many people have access to this account? Well, everyone. If you're taking a photo, everyone has access to it now. It's a joint account, and it's a communal account. Okay, so that's why feel free to take pictures of this QR code. And when you do buy Bitcoin, just send all your Bitcoins over here, and then you're literally sharing with the community because whoever has this code can just withdraw the money. All right. So before this class, I actually put in $100 into this account. Yes, I sent $100 worth of Bitcoin to this account. And if you are savvy enough and you want to, go ahead and pull it out. No, seriously. So I'll give you a few minutes. You want to take more photos or should we move on? And by the way, I've given this talk many times around the world. And in the early days, because Bitcoin was cheaper, I've given out over thousands of dollars just through this account. Go check the blockchain. You'll see it. Okay? You guys ready? Anyone get it yet? No one's gotten it? Okay, next. All right, too bad. Okay, so the evolution of ownership. Did I? Oh, here we go. Okay, evolution of ownership. This is a summary. Okay, from physical base to identity to information. Okay, so when it's information, that's why this guy's sort of off the cliff. But you know, it's digital, so there's no falling anymore. Okay. All right. So thank you very much. That's the end of my prepared remarks.
Okay. Bobby, let me join you
Yeah.
and we'll do some Q&A. Thanks
Okay,
very
good.
much.
Yeah, we have some time for Q&A. Perfect.
So can I ask you a question kind of about the situation? Why were the regulators in China so worried about the ICOs last summer?
The ICOs was particularly worrisome because China, the form of government, they want stability above everything. Okay, stability of society. And you know, when the ICO fundraising gets crazy, anyone can do an ICO, anyone can raise money. It's just a matter of convincing, you know, the sheep and the followers to give you money. And it becomes a form of illegal fundraising because you're fundraising, basically it's just snake oil salesman, whatever the expression is, right? And so it was getting out of control. So they just put a hard clamp, no ICOs, no token issuance.
Okay.
So that's a fundamental reason why.
Okay.
So it has nothing to do with the projects behind it, but just the idea that there was just you know.
And so people who are unqualified to buy into early stage high risk investments were doing it.
Yeah, exactly. People would give speeches, have conferences and say, hey, look at Bitcoin went up 200 times in the last number of years. Buy this ICO, it's going to go up 200 times in the next few years.
Yeah,
right?
it's so much safer to be an accredited investor here. You have to sign and say you're an accredited investor.
Yeah.
Why don't we open the floor? Where do we start? Over here with you.
So which hardware wallets do you recommend? And do you recommend even
Okay,
keeping?
can I stop that? Because at Stanford, we cannot endorse any commercial product.
Okay.
So we'll do that afterwards when we talk outside.
Okay, we'll do it privately. Yeah.
Yeah, okay.
What about
No,
keeping?
Thank you for the reminder. That's good
What about
policy.
keeping your tokens in something like Coinbase? Is it similar to keeping it in the bank in your?
Yeah. So you know how I made a whole spiel about no third parties and all that stuff, and I admit openly this is something very hypocritical of me. When running our company, BTC China as an exchange, BTCC, and also things like Coinbase and other, we're actually a hosted service provider. We're a hosted wallet, meaning that we actually hold your coins for you when you deposit them onto my platform. So in some sense, what we did was the opposite of what I was advocating. We were actually the third-party counterparty risk for you. Right? So I want you guys to be, all of you to be very aware of that. When you put your digital assets, digital currencies, Bitcoin, Ethereum, Litecoin, when you put it on another person or another company's platform, or even if you ask me as a friend to store it for you, it's a third-party counterparty risk. So the general answer is don't do it because then it's no better than, you know. That's why people, you know, if you lost money on Mt. Gox, is because people trusted it, put money on Mt. Gox, and when Mt. Gox failed, you know, they took all your money just was gone, disappeared. So you know, so the good thing about the thing about fiat money and banks is that you put your money in the banks and they have control, but if you take it out, they still have control because they can cancel your banknotes. You see the point? Whereas Bitcoin, you could put it on the platform if you trust it, or you could take it out, you could store it yourself. Then you're trusting yourself to do it. So that's a recommended approach. Maybe with hardware wallets
let's move on. Why don't we jump over to here? Yeah.
I heard you recently sold your exchange to some private fund in Hong Kong.
Yes.
So I'm wondering, like, what's your rationale to sell your exchange? Do you see a peak? And the second question is that can you suggest what's your thought about the future of the exchange?
Yeah. So the exchange business is very hard to run. So I've experienced it. We ran one of the world's longest running Bitcoin exchanges for many years. And I can tell you firsthand it's a very difficult job. So we got...
Why difficult?
It just, it's just all that stuff, the KYC, the regulation stuff, the risks, the fraud, the anti-fraud. It's just a hairy nightmare. So, so when the offer came to sell the exchange after we had to shut down, like, okay, all right, you want to buy it, take it. Okay, it wasn't like that, but I sort of exaggerated there. Yeah, but it was a good decision. The buyer really wanted it. The seller was like, okay, this might be the right time.
Can I take the second part of that question?
Yeah, please.
Do you think the exchange business is going to turn out more like stock exchanges where you only need a handful in the whole world, or is it going to be more like the bank business where you have a handful in each city?
It's going to be the bank business, but it's actually in the middle. You're going to need an exchange in every country because every country has their own fiat money system. I don't care if it's euro or Zimbabwe dollars or whatever. So every country that has its own currency will need an exchange in that market to facilitate people to go on and off the Bitcoin digital currency rail. Yeah. You pick the hands.
I want a student. Go ahead. Yeah.
Oh, awesome. So you talked a lot about Bitcoin and crypto in China, but apparently China is like the leader in blockchain patents right now, right? So
blockchain patents.
Blockchain patents worldwide, right?
Okay.
Can you talk more about what do Chinese entrepreneurs love about blockchain? Why does it matter to them?
Okay. Good. Great topic, blockchain. I'm going to give you my unedited sort of response on this, okay? It's an opinion I've been formulated, so I don't have slides presented yet, but I'm going to work on that. Here's my take. Blockchain is very hot, right? You've heard about blockchain for real estate, for real estate titles, blockchain for supply chain, source of goods, blockchain for this and that, blockchain for everything. I'm not so hot about blockchain because I still fundamentally, I'm a Bitcoin maximalist. I'm a classic Bitcoin, conservative Bitcoin person. So I still, and I openly tell people, the one and only killer use case for blockchain today is Bitcoin and cryptocurrencies, but not for all the other stuff. And if we may spend 5 minutes on this, okay? I'm gonna give a mini lecture at the end. Blockchain, the conclusion is this: blockchain is only good for digital information. Blockchain will never work when relating to physical world. Okay, people say blockchain is great because it has public data, it's immutable, it's a public record, decentralized, no one controls it, but it's there forever, you cannot modify it, You've heard these, right? But what people forget to tell you is for information to be put in the blockchain, there's only two kinds of information. Information that are solo source and information that is publicly recognized. So if I ask Richard, what did you have for breakfast today? Would you mind answering? What did you have?
Bacon and eggs.
Bacon and eggs. So he puts that in the blockchain. Does that really mean Richard actually had bacon and eggs for breakfast on May 1st? There's no truth to it. Because what it really means was Richard wrote into the blockchain that he had bacon and eggs for breakfast on May 1st. But it may not be that.
Yeah.
He may have had two breakfasts. He may have skipped breakfast. He may have just made up the answer. My point is, even like supply chain, they talk about, source of goods. Like, the lettuce was grown in Virginia by the farmer Johnson, And the farmer Johnson wrote in the blockchain, I grew this lettuce, on April 30th, and it got shipped by this carrier, and it arrived in this supermarket store, Safeway, and got sold. You have this blockchain tracking of all that. But it all depends on the person writing it in, right? It's not publicly verifiable information. Do you follow me? So with Bitcoin, what's interesting is, if I have 100 Bitcoins, and I would send 3 Bitcoins to Richard, would you like that?
Oh, I'd love it.
Okay.
Anytime.
You know what the blockchain does? It does 3 things. Number 1 is it does the math. It first checks, does my account, or it won't even be Bobby's account, it'll be some account, ABC account, does it have 100 Bitcoins? Well, according to the past history, it has 100 Bitcoins. And then it says, it does math. 100 minus 3 is 97. So now, after the transaction, it'll have 97. And then Richard's account might be brand new. It'll be 0 plus 3 equals 3. So that's why all the Bitcoin miners out there, all they have to do is compute 3 things. They verify the sender account has 100 Bitcoins. They verify that the receiver account is a legitimate account. So you do the subtraction and the addition atomically in one transaction. And most importantly, the third item is that the sender actually used the private key of the sender account to sign the transaction. So mathematical proof that the sender authorized it and not the receiver authorized it. You follow me? So this transaction can be verified and double-checked by anyone in the world with a computer. You don't have to be the sender or someone special privileged to do that. But when you talk about blockchain for special transactions with the physical world, whether let's say I sell you a house, I sell you that condo, or a house in this case. I sell the house, okay? I move it on the blockchain to him. Well, if the blockchain says it, does it really mean it's his? Is there recourse? Is there a source of truth? Does the Palo Alto city government or the Santa Clara County clerk registrar, are they the ultimate arbitrator rather? Are they the ultimate arbitrator of whether this property was sold? Right? Because if they hold the master key, then you don't need the blockchain. Does that make sense? If the real estate title deeds were done on the blockchain, then there's no master key. Unless you're talking about an Oracle database blockchain, or MySQL database blockchain. In which case, well, that's just a database. That's not a blockchain. Yeah. So that's my take. So I'm actually against, or sort of, what's the word? I'm not happy with all the crazy iterations of blockchain for the world. There's a lot of crazy stuff ideas that I think are wacko that should not be funded. But hey,
Okay, one more question. I saw your hand. Go ahead.
Thank you. Two quick questions. One, can you talk a little bit about the tension between like holding on Bitcoin because it's gonna value it, like you said, like a value asset, right? And
you said holding, right?
You said in China people are mostly using it as a value item, right?
Yeah, trading and investing, yes.
And at the same time, this tension about like making fungible, so people can trade it and so on. Like if everybody is holding, you cannot really trade, right? And two, what do you think is happening?
I didn't understand your question number one. Let's come back to it.
There is a tension between like
attention.
If everybody is holding, like
okay,
for example,
let me address that. first.
Liquidity in the market.
Liquidity in the market.
Yeah,
Exactly, right?
it's not
I
a
think
problem.
we're going to have to stop with that one, okay?
And the quick one, what happens if China will decide tomorrow to allow Bitcoin?
Okay, I'll talk about that. Okay, so there is no, it's a false, when you say there's a challenge between holding Bitcoin and transacting, it's actually a false, it's a false worry. By definition, every moment in time, everyone's holding Bitcoin. Because between the blocks, between the transactions, the Bitcoins are staying put. And then when it moves, every 10 minutes, they move, and then they stay put. Does that make sense? So forever, you will always have accounts that are just dormant, that the Bitcoin just stay there for days, for weeks, for months, for years. There's been Bitcoin accounts that have been dormant for years, right? And then there are accounts that move really fast. So that's how the world is. It's just like real estate in Palo Alto, right? If you try to buy, you can always buy a home in Palo Alto, but there are homes that have been, to the same owner for the last 40 years that have not just been sold. So the fact that people sit in their homes in Palo Alto and they don't sell it doesn't mean that there's no home available for sale. Because at the right price, someone will say, aha, I've made enough, I'm going to sell it. Does that make sense? So that's what I observed. So I don't see it as a natural challenge between the holders and the traders and the transaction people. Okay. So the next question is good. So what if your question is, what if China tomorrow decided to allow Bitcoin? That would be a world-shaking event. That would be history in the making, especially if they did it after you asked a question. That would be really awesome. I think it will happen. I think nothing in this world is permanent, especially a country like China, a very different government style. Even the one-child policy, which was in place for decades, finally went away last 2 years, right? So capital control is going to go away in China. The one-child policy has already gone away. A lot of rules will change, right? Bitcoin, whether it's officially allowed or not allowed, I think it will change. And here's why. I'll end on this note. Bitcoin, in the end, is actually about freedom. And I didn't realize this until I got into this industry. Like when I embarked on this journey, it wasn't a political thing. It wasn't an ideology thing. It was just because cool technology. It was cool. I got into it. But having been in it for 5, 6, 7 years now, I've realized that Bitcoin represents freedom. And I mean freedom with a capital F, with the real freedom that America is supposed to have, right? Do we have it? Yeah, okay. So America has it. It's that freedom. Why? Because in the end, we have freedom of speech. We have freedom of freedom of protest, freedom of what? Assembly. Freedom of assembly, that's the right phrase. You have all sorts of freedom, civil rights, and all sorts of stuff in America. That's great. I really love the country. I'm a U.S. citizen. I'm an immigrant, so I became a U.S. citizen. So I'm really thankful for America giving me an opportunity. That's how I got into Stanford and all that stuff. So in the end, Bitcoin is about freedom because it's almost like one of the last frontiers. It's the freedom to own something, truly own something. Now, this thing happens to just be a password, a passphrase, like a QR code. But if you are the only one that knows it and you don't reveal it to anyone else, that's what it is. You know, even if they torture you, you could pretend I forgot. In fact, when you do torture, you probably already forgot. Right? So the point is this plausible deniability, right? So that's a true freedom. The idea that I can give you something without anyone in the world minding their business. Right? I can just give you, whether it's a handshake or a piece of American pie or a fraction of a Bitcoin. Just like what I did, right? I gave out $100 worth of Bitcoin. I hope one of you got it. I don't know if you've already, anyone confirmed? Anyone here? No? Okay. Well, go back. You still have $100. So I was able to give that to you without the IRS on my back. We'll see. But really, I was able to give it to you without asking permission from the CEO of Wells Fargo Bank or the teller at Bank of America or the Federal Reserve. Now, it's just $100, but it could have easily been $1 million, right? If you gave me the budget, right? We share the $1 million. You see my point? If I gave out $1 million here, just like that, would it be illegal? Well, I hope not, because we're in America. Because it's freedom of information, it's freedom of speech, right? It's a form of speech, right? Literally, I showed it on the slide. It's my presentation. It's a form of speech. It just happens to be the private key to an account that had $1 million on it. Was that money laundering? Well, that's where the money laundering rules are a little bit crazy. So fundamentally, you know, probably none of you are very truly libertarian at heart. You know, I wasn't. But after learning about this, I like it. I think this is how I want my world to be. How I want my government to be. To allow me to own assets on my own free will because I have the technology prowess to manage the private keys. And I don't need someone else to do it for me. I don't need a banker. I don't need a teller. I don't need a company to tell me what I can do and cannot do with my own money. In the end, it's my money, right? So,
you know, Bobby, I think that's a great point to end our formal session on. We've got refreshments outside. Let's do all of our discussion outside, okay? Clear the room. But if you would, please thank Bobby.
Okay. Thank you.
Talk.